Hi, everyone, and welcome back to Loud Investing. I'm Chanel Montaigne, and today we're diving into the part that nobody talks about, the emotional roller coaster and how it secretly builds the most valuable skill you can ever have. I was checking my portfolio obsessively, like multiple times a day, even though I'd set up automations specifically to avoid that. So then the irony hit me, like I'd built this perfect system to exactly remove emotion from investing, but emotions were still driving me crazy. That's when I realized something profound. Investing isn't just about trying to build wealth. It's actually about building the confidence to make empowered financial decisions. And the process of watching your money move, it's like this emotional strength training you never knew you needed. And what I discovered about building this unshakable self-trust through market movements changed everything about how I see money decisions and what it actually means to be financially confident. So a few weeks into my automated investing journey, something interesting happened. My Spotify stock jumped 2.2% in one day. Now, old me would have either panicked, wondering if this was a bubble, meaning time to jump ship before things all fall apart, or celebrated blindly, feeling like I'm actually like this genius. But something had shifted because instead of reacting, I got curious and asked myself, why is this actually happening? And this is where investing stopped being just about growing my money and started being about understanding how the world actually works. I discovered that there had been a shift underway where people had been warming up to Spotify's latest AI DJ feature, which allows you to get more personalized music tailored to you. And from my personal experience with it, I believe it will be a breakthrough feature that will shape the longer-term growth of the company. But here's what fascinated me. Because finally, I understood why markets move the way they do. And this is where we can go into decoding the market psychology, which is rooted in these core markers. Now, they might sound like complicated jargon, but don't be fooled by that because it's actually like pretty simple. So first of all, let's look at earnings reports. So think of every 3 months as the end of a school term for big companies. That's when earnings season hits. They have to release their report cards to the public. These reports show exactly how well they've been making money. And it's much more than just numbers on a page. It's a critical test that shapes whether investors stick with them or bail, because based on what they see, trust can either be built or lost. And yeah, stock prices can jump or tank because of it. Now looking at industry trends. This is when success in one company often lifts up the whole sector because it provides a signal for how the rest will be doing. Thirdly, we have economic indicators. These are just the different markers like interest rates, like inflation and employment data that give us insights into how easy or difficult the market is right now. And they help paint a bigger picture of how the wider economy is doing. Then we can also look at sentiment shifts. Sometimes stocks move on vibes before the actual fundamentals change. Now, remember during COVID, for example, when everyone rushed out to buy toilet roll, that was like entirely based on sentiment without any concrete foundations. And now remember, as we mentioned in a previous episode, markets aren't random or personal. They're just millions of people's collective best guess about what companies will be worth tomorrow versus today. And when new information changes those guesses, well, that's when prices move. But investigating my ETF movements taught me something a little different. My S&P 500 ETF didn't make any dramatic moves, but the small shifts taught me a lot. One week, it dipped around 2%. And instead of freaking out, I got curious instead, and I started digging. And it turns out inflation had come in higher than expected. That's basically a fancy way of saying that the prices for everyday stuff like food, bills, and all of the basics were rising faster than usual. And that made investors nervous because higher inflation often leads to higher interest rates. And when borrowing money gets more expensive, like when a loan or like mortgage rates go up, people and businesses tend to pull back on spending. We'll dive deeper into how inflation and interest rates are connected in another time. But for now, just know this. When the market gets uncertain, stocks can take a hit. Not necessarily because anything is wrong with the companies, but because everyone is feeling cautious. And this is also a great example of what economic indicators are and what they reveal to us about the bigger picture at play and how it can affect our investments. This investigative approach started building something more valuable than profits, and that's decision-making confidence, especially in uncertain conditions. Every time I researched why my investments moved instead of panicking, made a calm decision based on information rather than emotion, and stuck to my automated system during market volatility, I was building unshakable trust in my ability to handle my investments, even amid circumstances that were making me feel that my money was moving in the wrong direction. This taught me that market volatility isn't something that happens to you. It's something that builds your emotional resilience for you, because every downturn you weather makes you stronger for the next one. And a few weeks in, my automated system was working in the background while my investigation practice was building confidence in the foreground. Which brings me to a really interesting realization that I've had along this journey. That the compound interest of confidence is more valuable than the compound interest of investing itself, because confidence compounds into every financial decision you make for the rest of your life. But this confidence isn't just an internal feeling. Think of it like a stone dropped in a pond. It creates ripples that travel out into every corner of your life. And that ripple is what gives you a firmer voice in negotiations you once shied away from. It's what helps you pause and choose the path with long-term worth instead of just grabbing at short-term comfort. And maybe the most powerful ripple of all is that you finally learn how to manage your money from a place of wisdom and of value, letting go of those old decisions driven by anxiety and fear. So in essence, when I reflect on things, this journey of investing is really about becoming someone who makes empowered financial decisions consistently. This is the new identity that I have consolidated thanks to these simple actions. Every automated investment says, I believe in my financial future. Every market investigation says, I can handle uncertainty with curiosity and with learning. Every volatility period you navigate calmly says, I trust systemic approaches over emotional reactions. Now, you're not just building a portfolio here. You're building the identity of someone who deserves financial security and has the emotional tools to achieve it. And the markets aren't just a place to try and grow your money. They're actually a training ground for developing the confidence to handle any financial challenge that life might throw at you. And that confidence, well, it literally compounds forever. I would love for you to go back to your investments from last week. Did they go up or did they go down? Your mission here is basically to find out and understand why. Make sure to always use reliable and diverse sources. And remember, you also have the eToro feed that you can check out and engage with to see what others are thinking. Share your investigation discoveries in the comments below, and when you figure out why something moved in your portfolio, tag us. Let's build a community of curious and confident investors together. I started this journey learning about investment personalities, and I overcame my fear of opening up my first account and made my first real investments. And now, well, I have the tools to invest systematically while developing unshakable financial confidence. And the markets, well, they will, of course, keep moving, some days up and some days down. But the person that I am becoming is someone who investigates rather than panics, who builds systems rather than reacts emotionally, and who trusts themselves with important financial decisions. Now, this is a transformation that will compound forever. If taking that first leap into the world of money and investing is as big of a challenge as it was for me at the start of this process, then I just hope that sharing this experience with you will also allow you to undergo the same liberating effect in your financial life. If this episode resonated with you, please subscribe and share it with someone thinking about their financial future. Because word of mouth is how our loud investing community grows. And until next time, I'm Chanel Montaigne, encouraging you to keep investigating, keep building, and keep learning. See you next week, where I'll still be here figuring this out right alongside you.